Good afternoon, friends. Today we'll be starting with another topic, which is loan syndication, and we'll go through this topic in detail in this particular slides. So, loan syndication means in investment banking, big corporates when they require funds to the tune of crores and crores, and you can take the example of Vijay Mallya, who borrowed approximately 2500 crores initially, and then again restructuring was done, and then again a big amount of money was injected into this Kingfisher Airlines. So this is one example. And likewise, you see all big corporates in India, they are dependent on banking system a lot. Most of them, they do have their term loans, and when requirement is huge, one single bank may not be able to give full amount of exposure, will not be able to give full amount of loan amount to a particular individual. Reasons are like they do have their own tolerance limit. RBI has restricted banks going into any particular sector, so that restriction will force banks to work within limits, and due to those limits there are situations where certain banks sometimes don't have capacity to undertake the entire loan portfolio standalone. So what is happening is, like in such a scenario, banks will create a cartel, a group, or a syndicate, so to fund such sort of projects, so whereby every bank within limit, staying within limit, will be able to have a share in the project. So this is all about loan syndication. Then be going into detail. Now you see, in loan syndication, these will be the concepts which will be coming in. The loan syndication address loan operations of a bank or a financial institution that enters into loan syndication contract with borrowing customers. Now you see, these are the three terms which will be coming up again and again. Loan syndication facility. Now this is a facility to client. Then you do have syndicate borrower. Syndicate borrower is a person who is actually beneficiary. So your customer who is going to borrow will be quoted as syndicate borrower. And then you do have syndicate participant. Participant will be all those banks who are willing to come in as a partner to fund this particular project. Now in this you do have an agreement. This agreement is quoted as syndication agreement, is like, because all terms and conditions related to borrower and lender will be negotiated and will be will be executed in the form of an agreement. So that is what is syndication agreement. It consists of all terms and condition, followed by, you will be having this concept of arranger bank. Arranger bank, you can take arranger bank like an investment bank, because they are entitled, they are into a role. Their role is to bring in the various facilitators together. So a client may not be able to go to different banks, may not be able to negotiate interest rate effectively with banks, looking at his own position. So maybe this arranger bank is the right appropriate authority to bring in multiple banks together, so that they can be able to pool in the funds and fulfill the borrowing requirements of the client. And as we have already discussed, participants are banks involved in this syndicate. Now you see, every loan, whenever it will be disbursed, so what is going to happen is, customer will be getting loan disbursed, and normally customer will be taking loan, will be putting this money into their business, and after successful completion of the project, or whatever is the repayment schedule, they'll start repaying their loans. So yeah, whatever loan amount will be repaid back to this syndicate will be distributed, or will be allocated to different participants in an agreed ratio. So all interests and whatever principal recovery will be there will be shared in the same proportion. Now the process of disbursing a loan, syndicate loan. Now you see, you do have two concepts in lending. One is disbursement and one is sanction. Sanction is when technically a branch is getting an approval from their higher authority or from competent authority to give the loan to customer. This type of order is quoted as sanction. But now second element of this lending process is like disbursement. Disbursement is when customer is putting up a request to bank to credit the amount into his account against that sanction order received from higher management. Now this is these are two different concepts. One is disbursement and one is you do have sanction amount. So sanction amount may be big, disbursement may be in stages. So we'll see to it in coming slides too. So what we are supposed to do is like we are supposed to understand how loan will be disbursed to client, and this is through a syndicate. And syndicate means you'll be having multiple participants into it, and they will be sharing the like total loan value. So every participants have to bring in their contribution. Now you see, there are certain factors written like how customer can avail a loan. Means what are the considerations for a customer? Like it may be possible, like depending on the nature of your project, customer may ask it in one go, one lump sum payment, or it may be like regular payment in stages from bank at a desired frequency. Frequency means maybe half yearly, yearly, quarterly. It depends on what type of project are you in. And then the syndication agreement is again very important, because it will give you what rate of interest and what terms and condition will be applicable to different stages of funding. So there is a possibility like in different stages rate of interest may also vary. So it is also possible that bank will be able to give you revolving credit or non-revolving credit. So revolving credit means it is like working capital limit, where funds once allocated means if it is repaid back to bank will can again be withdrawn. So that is what is into circulating capital or revolving capital. And whereas non-revolving commitment from bank's perspective is like where it is a term loan given once, will not be given again, and a repayment has to be made from client's side in installments. So this is what is like customer perspective of taking a loan. Now there is similarly, depending on the requirements of a client, we can invite participants also. So participants may have their reservations, so it is important that what customer is requiring should be clearly stated to participants, and if they find themselves to be compatible with their requirements, then they can come in and join this particular consortium finance. Now you see, in this it is possible that due to the nature of borrowing requirement, different set of participants will be brought in different stages. And suppose a particular loan may be having 4 stages, and in all these 4 stages there is a possibility that in every stage you will find or come across a new set of bankers altogether. So what it indicates ki your participants may be same or may be different, or your rate of interest will be same or will differ from stages to stages. So it has to be taken into consideration while taking a loan. Now tranche, this is another term, technical term used commonly in syndicate loan. So each installment of a loan is termed as a tranche. Means a loan may be for 100 crores, so this 100 crore may not be required in one go, may be required in 4 or 5 stages. So every time you are giving 2 crore or 3 crore to your party, so this 2 crore 3 crore amount released to client is quoted to be into tranche, means installments. So each such installment is known as tranche. So tranche is now clear to you somewhat. Now you see, under a tranche, specified portion of the total loan is made available to borrower. So suppose borrower is given a commitment of rupees 10 crore, and in first installment he has taken 2 crore. So what is happening is like the aggregate value of tranche cannot exceed the total loan amount. So it has to be up to 10 crores only. So next is like the tranche can take the form of commitment on the part of each of the participants to grant in principle. Means underlying principle is there, like when we started this case of lending, there were people who came in, banks who came in, and they assured that they will be putting in the money in this particular loan agreement. So when it is time, when it is installment or this amount of loan is due, all banks should brought in their funds and club together so that funding can be done to client appropriately on time. Now this is what is supposed to be there in tranche. Next is like it involves commitment on the part of customers also, because customers have to fulfill so much of documentation. Let's see, say first stage you have Catholic Syrian Bank, Federal Bank, South Indian Bank into loaning. So once your stage 1 is done, now you are going into stage 2, where you are finding Axis Bank, ICICI Bank and HDFC Bank. So you have to do fresh set of documentation before getting your loan. So now what is happening is like there is a possibility that things may be delayed due to slow processing of your documents. Now it is important that customers should fulfill their part. on time. So they should be doing the documentation so that they can be released their funds at the earliest. Now, once your terms and conditions are finalized, tranche or whatever schedule of payment will be there will be actually issued to customer. So customer will be getting in advance a proper schedule of like how he is going to get his like funds from the bank, what dates, which banks will be involved in it, what terms and condition are involved. So everything will be quoted here, and these are in line to the requirements of the borrower. So overall what is going to happen is like participants are directed to fulfill the commitment whenever there is a schedule is due. So drawdown. Now what is drawdown? Drawdown, if you go into detail, you see drawdown is something which is like temporary, and when the commitments are fulfilled, this temporary means see, I'm giving you again, we'll understand this thing with the help of an example. A loan is sanctioned for 100 crores and it has 10 stages. Like every quarter you will be getting one stage of fund released to you. Now in this case, now what is happening is like these stages are told to you, they are quoted as tranches. So every month or every quarter you are getting one tranche. Now this second tranche will come next quarter or next month. So this is how you do have it. In one tranche, now you do have sub bifurcation none. Now these bifurcations are quoted as drawdown. Now drawdown means one tranche cannot be withdrawn in one go. Now this is the frequency of withdrawal allowed to borrower. So it can be daily, it can be based on your invoice, it can be based on like requirements as per like how they are appearing into your books. So there must be something which is clearly defined in your terms and condition to quote clearly on what will be the drawdown. Drawdown means how borrower will be able to withdraw funds from his account. Like tranche, money is given into account. Now from that account, how you will be withdrawing is clearly stated. Can it be withdrawn through self check or can it be withdrawn through account pay check? Things will be very clearly stated here. And now such loans will have these drawdown loans will have certain tenures independent of tranche tenure. Tranche tenure means I stated if it is quarterly means after every 3 months you will be getting an installment, or if it is monthly after every month you will be getting one installment. So 30 days is your waiting time. Now your tranche period is 30 days, but your like drawdown loan period may be different. They need not to be in line to tranche tenure. Now the tenure of drawdown loans fall within the period between the start and the end of the main syndication contract. So suppose loan is for like 5 years, in which first 1 year you will be getting your funds in stage releases. So that first 1 year time is what is quoted as your syndication contract period. So during the first year you can have like any time you can have your withdrawal done. So this is what is quoted as drawdown tenure. Now you see, next is like in this we are just going to have a conclusion of what we have done till now. So banks will be able to give loan to clients based on what contributions every participant is supposed to made. So there is a schedule and this schedule is telling you when and how and why. So main borrowing requirements, which is principal